events to watch out for, but let's shift focus to some global stories that we've been tracking for you bright and early this morning. An important commentary coming in from the central bankers over the weekend. Now, we did tell you what Christopher Waller said. Let's bring you one more voice from the Fed as well as ECB. Now, New York Fed Reserve President John Williams says that the central bank is on track to start cutting rates later this year despite stronger than expected inflation. He also noted that the progress towards their 2% inflation goal can be a little bit bumpy, but that overall the economy is headed in the right direction. Meanwhile, let's shift focus and see what's happening with the European Central Bank, because ECB's governing council member Mavis Muller cautioned against lowering borrowing costs too early, with the rise in salaries still too strong to be compatible with that 2% price goal.
And keeping it with central banks, then, three major brokerages expect the Fed to lower interest rates in June. That's 3 months later than what the market has been anticipating. Remember, the January Fed minutes signaled broad uncertainty among the policymakers about how long borrowing costs should remain at their current range of 5.25 to 5.50% to bring inflation to the central bank's 2% target.
Well, and focusing on some big earnings over the weekend, Warren Buffett's Berkshire Hathaway reported a big rise in operating earnings in Q4, largely led by massive gains in their insurance business. Now, while cash pile expanded to record levels as well, a 17% year-on-year jump in operating earnings for the full year is what was recorded. Now, GECO, which is considered Buffett's favorite child, logged profitable year-on-year profit, where improvement in earnings was driven by the premium rate and increases and lower claims as well. Now, in his letter to the shareholders, Warren Buffett has seen remembering Charlie Munger, calling him the real architect of the present Berkshire. The letter also highlighted that markets are exhibiting a casino-like behavior, while also highlighting the investment rationale and sentiment going on at Berkshire. The letter reads, and I quote, "Patience pays, and one wonderful business can offset the many mediocre decisions that are inevitable."
And shares of Warner Brothers Discovery took a sharp hit, tanking 10% on the back of disappointing results in the fourth quarter. The disappointment largely on account of dismal advertising and company's failure to provide free cash flow forecast for 2024. Company reported a 14% decline in linear television advertising revenue and a 4% drop in actual distribution revenue. However, streaming service Max ended 2023 profitable for the first time.
And well, while we are talking about global stories, how can we not talk about Nvidia, because new milestones for Nvidia are underway. After that blockbuster set of earnings, the company's market cap briefly surpassed the $2 trillion mark, but the chipmaker stock pared some of the gains later in the day, leading its value to edge just below that $2 trillion threshold by the market's close. Now remember, Nvidia added a staggering $277 billion to its market cap on Thursday, the biggest single-day jump of any company so far on record.